Hey, good morning, everyone. Welcome to our Phillip Securities Research morning call for today. We have a few stock counter updates, including a non-rated visit note for Frasers Property, Phillip on the ground for Suntec REIT, SingPost, and Marco Polo Marine. For technical analysis, we have on the S&P 500, ETF monthly, and STR, high STR monthly. And for macro sector outlook, we have Singapore banking monthly as well as Singapore weekly. Kindly note that our today's morning call will be the last one for this year. We'll resume on 6th January next year. Yeah. So this is just our usual disclaimer. The information provided is for educational purposes only and should not be taken as financial advice. Yeah, so that's without further ado, I'll hand over time to Glenn to get us started on the Singapore banking monthly. Thanks.
Thanks, Zane. Yeah, so we just start off with the first slide being the interest rates. So move on to the next slide. Yes, thanks. Yeah, so for the interest rates, it's as expected. The Singapore interest rates, the 3-month SORA was down 17 basis points, 17 basis points month on month to 3.29% in November. And this is the lowest that we have seen it in since February 2023. Furthermore, it also fell by 47 basis points year on year and was around 30 basis points lower than the third quarter average. So we do expect that the 3-month SORA will continue to decline with the Fed rates as more rate cuts start to kick in, and we see more rate cuts coming in. But however, we also do think that the decline in these interest rates will be, slightly lower than it was previously expected. Hence, this is beneficial for the banks. For the Hong Kong interest rates, it also fell in November. It was down 5 basis points month on month to 4.31%. Year on year wise, it was down 113 basis points. Now moving on to the next slide, we're looking at the loans growth. So for some positive news for the banks, the loans growth has been quite healthy for the past few months. It's up 2.7% year on year in October, and this is a 25-month high for loans growth, as well as a continuation of the similar increase we saw in the previous month in September. We still do expect low single digits loans growth for 2024, as loan growth is expected to recover further from the expected rate cuts going into the fourth quarter of the year. And the banks have also maintained their low single digit loans growth for 2024, for full year 2024. Going into 2025, we do expect loans growth to pick up slightly better. I think it will be hovering around mid to high single digit for next year. And it's really dependent on where the interest rates really do head to. As for the business loans, it rose by 2.4%. Loans to the building and construction segment was the one that propped it up. It rose by 3.3%, while the loans to the manufacturing segment fell by 5%. As for consumer loans, it was also quite healthy, mainly due to the housing loans, which has been really the only positive for the last 2 years, I think. As for the total deposits and balances, it grew by 4% year on year. And I think more importantly is that the CASA, or current account and savings account ratio, rose to 18.6% from 18.4% the previous year. So this is quite positive news for the banks, because a lot of the investors, a lot of their customers are moving away their at least when the fixed deposits that they had previously are starting to mature, they are not putting it back into fixed deposits, mainly due to the rates not being as good. So it's shifting back towards the CASA, or current account savings account. And this is very beneficial for the banks, because CASA has very low interest rates, right? It's almost close to zero. So the bank's funding costs will now be able to improve further, and this will actually help to improve their net interest margins and resultantly also their net interest income. Now moving on to the next slide, we'll be looking at the SGX statistics. So the preliminary SDAV, or Securities Daily Average Volumes, surged by 49% year on year to 1.4 billion. And however, for the DDAV for October also grew similarly by 48% year on year to a record high. Excuse me. Securities trading grew strongly as the Singapore stock market remained a flight to quality venue. The derivatives were boosted by the increased trading activity across multiple assets classes. And for the VIX, it's just the market index that we use to measure the implied volatility of the S&P 500 index. It averaged 16 in November, down from 20 in the previous month. And this dip in volatility was mainly due to it being after the US elections, and it returned to a more normalized level. For the top 4 equity index futures turnover, it rose by 19% year on year due to the higher trading volumes of the FTSE China A50 index futures. So for these this market statistics, across the board, it seems to be quite healthy across the securities as well as the derivatives volumes for SGX, which is why we have recently seen the SGX share price run up. So I think SGX will be able to sort of post quite a healthy set of results for their first half FY25 results. I think we'll be looking at be able to get the results somewhere time in February of next year. However, I think one thing to watch out for would be the treasury income, which will probably dip and sort of soften this increase in volumes a little bit. Now moving on to the next slide. Yep. So for the banks, I think they have recently run up in November. So on average, it was up 10% for the three banks in November. UOB was the strongest, with an increase of 13%, while DBS and OCBC rose by 10 and 7% respectively. So if you're asking why is there why is there sudden surge in the bank's share price? I think it was due to a lot of reasons, multiple conditions and reasons that cause it all. So the first one is that it's really due to the strong set of third quarter results across the board. So all three banks had a very healthy results that they posted for third quarter. Secondly, also with Trump winning the elections, it has sort of lowered the rate cut expectations. So the banks will now sort of benefit from this elevated interest rates, as the decline of their net interest income as well as net interest margin will come in lower than expected, while their fee income does continue to grow at double digits. So it's just a lot of positives for the banks. And last but not least, also the banks have a lot of excess capital which they are now willing to spend, or at least they have given some indication to spend. Previously, only DBS was really the only bank that was very aggressively spending the excess capital and giving back to shareholders. But now, not just DBS, all the other two banks are also sort of hinting or mentioning that they will do the same. UOB has said that they'll do a share buyback program, and they also indicated, at least the management has indicated, that they'll be more aggressive in capital management. Hence, UOB did perform the best in November. Whereas for OCBC, they did say that they will be looking at some form of capital management, but no details on how or when they will be doing it. So we do raise our target price for all the three banks. We did raise DBS's target price from $41 to $41.60 to $44.70, and we upgraded it to an accumulate from a neutral. We raised OCBC's target price from $17 to $18.80. The accumulate is maintained. And lastly, for UOB, we raised it from $37 to $39.70, with the accumulate also maintained. Just to note that there's no change in our ROE as well as the earning estimates, and mainly this increase in share price is due to the rollover to FY25's book value. Now moving on to the next slide. Yeah, the last slide. So we do upgrade to an overweight from a neutral for the banking sector. With the lower rate cut expectations going into FY25, the banks will benefit from the decline in net interest income, and net interest margins will soften for them. So this will be a positive. The capital markets are also turning more buoyant for fourth quarter with the rise in trading volumes, and the bank's trading income could further benefit. Furthermore, the continued double-digit growth in fee income as well as the loan growth recovery will boost their earnings. And last but not least, there's also a further upside to dividends as the banks look to manage excess capital of around $2 to $4 billion. And a possibility of share buybacks will also improve the ROE and EPS. So I think for the banks, looking at it, it's quite positive across the board. Hence, we are an overweight. We do have an overweight on the banks. So that's all I have for the banking sector. I'll now hand it over to Darren. Thanks.
Thanks, Glenn. Yeah, now run through Frasers Property Ltd. So we went for the site visit trip at Bangkok. So we also attended the Frasers Day Bangkok during 24. So that happened last week. Yep. So the title here we have is introducing the $5 billion One Bangkok. So One Bangkok is a mixed development. So I'll talk more about that later. Yeah, next slide, please. Yeah, so a quick background on Frasers Property Ltd. So FPL is a multinational investor, developer, manager of real estate products and services across the property value chain. So it is listed on the SGX, and right now the group has an AUM of about $40 billion. So they operate across 5 asset classes. So these are commercial and business parks, hospitality, industrial and logistics, residential, as well as retail. So now the group has strong presence in Southeast Asia, Australia, Europe, UK, and China as well. And their hospitality and hotel segment spans over 20 countries across Asia, Australia, Europe, Africa, and the Middle East. So right now, FPL is a sponsor to 3 Singapore-listed REITs. So they include Frasers Centrepoint Trust, Frasers Commercial Logistics and Commercial Trust, as well as Frasers Hospitality Trust. And the group also is a sponsor to 2 REITs that are listed on the Stock Exchange of Thailand. And they are Frasers Property Thailand Industrial Freehold and Leasehold REIT, as well as the Golden Ventures Leasehold REIT. So for the earnings drivers for FPL going forward, they mentioned during their Frasers Day Bangkok that the most important thing for them right now is to focus on capital recycling. So which is to recycle a lot of these mature assets that they have that's sitting on a balance sheet into its listed REITs, like both in Singapore as well as in Thailand, as well as the ramping up of One Bangkok, which is a new mixed-use development, which just opened its doors on 25th October 2024 and is scheduled to open in phases from now till 2027, as well as achieving strong sell-through rates for their residential projects and strengthening their recurring income sources and fee income. So that's mainly from the REITs. Yeah, so from the trading perspective wise, it's currently trading at about 62% discount to its book value, and it pays about a 5% dividend yield. Yeah, next slide, please. So now I'll now talk more about One Bangkok, which is the new development. So One Bangkok is a mixed-use development with a gross floor area of about 2 million square meters. So that is massive. As you can see in the picture here, they have many entrances. So One Bangkok, they have 5 grade A office towers, 3 luxury hotels and service apartment towers, 4 retail precincts, and 3 residential towers. So you can see, like I mentioned, they have a lot of entrances so that to avoid congestion during like the busy working hours. Like, cause they have so many office buildings, right? Have almost 500,000 square meters of office space. So they have 5 office buildings. So to avoid congestion, they have many entry points for the cars to drop off the employees and such. Yeah, cause it's really a big space. And I went there, like you can't really walk from one end to the other, and you have to take a coach or or car. Yeah, because it's really far. And yeah, so for the office towers, basically now there are 2 office towers that are already open, and office tower 3 is 40% occupied and 70% occupied for office tower 4. Yeah, and one more thing is that this One Bangkok is very accessible. It's near the MRT. Like when we went there, we took the MRT from a hotel to reach One Bangkok. Yeah, so it's really accessible. Yeah, next slide, please. Yeah, so this is just a slide of the retail concepts in One Bangkok. So they have the stories, which is a retail concept where it is very like there's a story behind the retail store. So it's very nice, and it's like a concept retail store kind of uh design. So there's the stories, and they have the parade, which is also open. So both the stories and parade are open, and they have about 90% committed occupancy. So far, about 70% has already moved in, and is expected to reach about 80% by 80% is expected to have moved in by the end of this year. So post 1928 is scheduled to open in a later phase, so it's not open yet. And they also have a One Bangkok Forum, which is a live entertainment area featuring world-class culture, arts, and entertainment center. Yep. Next slide, please. Yeah, so this is just some pictures of the site visit. So we start off with One Bangkok. So the figure 1 and figure 2 shows the 2 office towers that are already ready. So figure 1, tower 4 is 40% occupied, or I mean 70% occupied, and tower 3 is 40% occupied. So some of the notable tenants include Microsoft, BMW, OCBC, KGI, and Baker McKenzie. Yeah, so One Bangkok Office Tower 5 is not ready yet, but it's I took a picture and it's shown on the right. Yeah, so just a recap, like I mentioned, each office tower has about 100,000 square meters of space. So with 5 office towers is about 500,000 square meters, and the asking rents are about 1,500 Thai baht per square meter per month. So that equates to roughly in the ballpark of about 7 Singapore dollars per square foot. Yep. So moving on to the next slide. So the stories is on the left. So that is the concept store, a kind of theme for the retail. So that is open already. And the right side is the parade at One Bangkok. So that's the entrance. And in the middle, there are a lot of art and artsy kind of things that are placed inside One Bangkok. So this is just one of them. So this is a S curve by Anish Kapoor at One Bangkok. So it's like a concave convex kind of thing, and you can see the picture is inverted at one side because of the concave and convex situation in the S curve. Yep. And yeah, so more on One Bangkok is that in the later phase, it's also expected to host the Thailand's tallest building upon completion. So that spans about 436 meters in height, and that signature building will comprise of half of it is of office, and the other half is a very luxurious hotel. Yeah, so that is on One Bangkok. So it's like I mentioned, it's a huge development spanning over 2 million square meters, and the total investment value of it is about 4.7 billion Singapore dollars. So that's huge. Yep. Next slide, please. Yeah. So we also visited Samyang Midtown. So Samyang Midtown is a 300,000 square meter mixed-use development in the Samyang district. So it comprises retail, office, and residential spaces. It opened in just shortly a few months before COVID, so they were hit by COVID, but luckily now it's ramped back up. Samyang Midtown is located near educational institutions, so it's designed as a comprehensive hub that integrates work, dining, relaxation, and learning. So it's a go-to destination for students. So it's really very popular among the students. As you can see the picture there on the right, it also has a e-sport studio. So it's for students. And the Samyang Midtown Mall, it offers 36,000 square meters of retail space. It also has a 24-hour zone, which includes co-op, which is a co-learning space, something like a library in Singapore where you can study and do your work quietly, and you can use it for free. So yeah, it's a reading and working space. And it also has the 24-hour zone. It also includes, other than co-op, it includes supermarkets, restaurants, and a gym as well that anyone can use. And Samyang Midtown Mall, it has a Sky Garden, and it has the Samyang Midtown Hall, which is a picture on the left. The hall is a multi-purpose event venue space. And Samyang Midtown, the mixed-use development, it also has an office tower. So the office tower encompasses 48,000 square meters of space. And it also has a residence and a hotel. So the residence offers 516 leasehold condominium units, and the hotel offers 120 rooms. Yep, next slide, please. Yeah, we also visited Grandeur South Horn. So that is a residential development of a single detached house in Thailand. So it's located in Bang Khun Tien, Bangkok, and it comprises 170 units. So the prices are ranging from 13 million Thai baht to the most luxurious 23 million Thai baht. So the 23 million Thai baht is about 900,000 Singapore dollars. Yeah. So the most luxurious project is Lucerne X. And yeah, we didn't get to see that because it's exclusive. We saw the Lucerne, which is the next most which is the next in line, basically, the next most luxurious. So that one is priced at about 20 or 18 to 20 million, the Lucerne. And inside the Lucerne, you can see in figure 11 and 9, 9 is the swimming pool, which has a current, a strong current that something like those you see in the Olympics where the Olympic swimmers train against the current, yeah, something like that. And in figure 11, they also have which is the interior of the Lucerne. So it's a 2-story building, and it has a private swimming pool, a 5 bedrooms, 7 bathrooms, a living room, a dining room, and parking space for 3 cars. So in the middle, that picture is Milano. So that's the third most luxurious. So it has space for 2 cars, and it does not include a swimming pool. So the Luzon is about 320 square meters of space, while the Milano is about 251. So the middle one, the middle picture costs about 16 million 15 to 16 million Thai baht. So that is roughly about 7,000 Singapore dollars. Yep. So that's for Grandeur South Horn. So that's the best the biggest contributor for their FY 2024 revenue. Yep. Next slide, please. So we visited the last place, which is the Frasers Property Last Mile Hub. So this is a logistics center. It features 10 green modern warehouses and 1 office block. So this is the south of central Bangkok. So the buildings are designed to minimize the environmental footprint. It uses sustainable materials and energy efficient technologies. So this is well located. It is 4 kilometers away from Sahatai Terminal, and it's 17 kilometers away from Bangkok Port. So there are 10 warehouses there, and each warehouse has a GFA of about 2,000 square meters, and 1.7K of that is dedicated to storage, and the remaining about 250 square meters of it is for office space. So they have 1 office block there which has a GFA of about 2,000 square meters. So the office block is in figure 12, and the interior of the office space is figure 14. So right now the office block is not occupied, and the other 10 warehouses is about 50% occupied by third-party logistic tenants. So the middle picture is the interior of the warehouse, which is considered small on the smaller side for a warehouse. Is 2,000 square meters, and right now the asking rent for the warehouse is about 170 Thai baht per square meter per month. Yep. So that's all I have for Frasers Property site visit note. I'll now do a quick one on Suntec REIT. So Suntec REIT is covered by Mel. I'll just cover because she's on leave. So what we'll run through today is the conditional offer that Gordon and Celine Tang, they next slide please. Yeah, so they purchased another 2% of Suntec REIT through their investment vehicle Alios or investment holding company. So as a result, they now own about 31%. So previously before they acquired this additional 2.1%, they own about 29%. So with this additional 2.1%, they will acquire over 30%, which crosses the limit. As you've seen a snippet of the code on the right, it says that when any person acquires carries more than 30% of the voting rights of a REIT, the person is required to make a mandatory general offer for the units of the REIT which the person does not already own. So basically, because of this, to comply with the code, they had an offer to purchase the other units of Suntec REIT at $1.16. So that is exactly the same price as the amount or the 2.1% that they purchased last Thursday. And this $1.16 is 44% discount to the NAV of $2.07 and $2.07. So from our view is to definitely reject the offer because it's trading as such the offer is basically such a steep discount to NAV, as well as the fact that Suntec REIT, the share price is also at over 120 now, so it really doesn't make sense to accept the offer of $1.16. Basically, you lose money. But the good thing about this is it kind of sets like a price floor to Suntec REIT because of this offer at $1.16. So 116 we see now as something like a price floor going forward, at least for the nearer term. And what next for this offer is that the full offer document with more details will be expected to follow within a couple of weeks from the date of this announcement. And from Alios, which is the investment holding company as well, it says that the offer was made solely just to comply with the takeover code, and it does not intend to privatize Suntec REIT at all. Yeah, so that's just a quick one. And yeah, we do have coverage on Suntec REIT, and we do maintain our buy call at $1.36. So we just to reiterate that we recommend to reject the offer. Yep, so that's all from me. I'll hand over time to Say now to do technicals. Thanks.
Thanks, Darren. Good morning, everyone. I'll move on to the technicals. So first up, looking at the chart for S&P 500. Last week, we saw a breakout of the 6,020 resistance level, and continue close at a record high on Friday at 6,090. So I think for this week, we are likely to see this bullish momentum continue on, possibly to retest the trendline resistance, with immediate resistance at 6,150 to 6,200 area, and support at 6,045 to 6,075 area. Then next one, we have our ETF monthly for November. We titled it S&P 500 and Singapore Equities to extend their bullish momentum. So first up, to review the respective asset classes performance in November, most of them were in the green. The top gainer was the ETF tracking Bitcoin, which surged 38%. As for the losers, it was gold and Hang Seng Index, which fell about 3.1% and 4.5% respectively. As for their current trends, S&P 500, Bitcoin and Singapore equities are currently in an uptrend, while US Treasury bonds, gold, oil, and Hang Seng Index are in a range consolidation. For our outlook for December, we expect S&P 500 and Singapore equities to extend their bullish momentum from November, and as well as US Treasury bonds and Hang Seng Index to do a slight rebound in December as well. Bitcoin is likely to trade sideways as it consolidates its recent gains. As for gold and oil, we expect some further pullback in December. So first out, looking at the S&P 500 ETF VOO, currently in November, there was a breakup of the $517 resistance level and continue to test the trendline resistance. So I think the momentum is still very strong. It's at record highs, and we're likely to see price move higher, possibly towards the next resistance area at 560 to 573, which is about at 570 is about 2% upside from the current price. As for the Treasury bond ETF IEF, it did a rebound from the $94 support level, which was a prior resistance, confirming the upward support line. So I think with that, we are likely to see some slight rebound continue towards December to retest the previous breakdown level at about $96. As for the Gold Mini Shares Trust GLTM, some weakness after a very strong run this year. So it actually broke down this rising wedge in November, as well as the $53 level, which was a previous breakout level. So currently it's acting as a resistance. We could see price do a slight further pullback to retest recent swing low dip at about $50 about there. And as for the oil and gas exploration and production ETF XOP, price broke out of the descending triangle trendline resistance at about $140 and retested on $50 resistance level. But with a retest of resistance, we expect price to pull back in December to possibly backtest this breakout. And we expect price to hold at about $136. So some slight pullback in December after a strong November for this ETF. The next one, a very strong one, is the Bitcoin Strategy ETF, BITO. So it broke out the downtrend channel resistance in November, a strong run towards about $26 now. So we expect some sort of a sideways consolidation after these very strong gains made in November. As for the Singapore Equities ETF, continued a very strong uptrend, still continue to form a recent higher high to test the trendline resistance. So we expect this bullish momentum to continue on towards the end of the year, possibly to test the $4 resistance level next. As for the Hang Seng China Enterprises Index ETF, continue to pull back for 2 consecutive months, but it's currently rebounding slightly from a previous support level, which is about at around 71 Hong Kong dollars. So we expect some sort of rebound to take place in December, but resistance will still hold at about $74, which was a breakdown level. And next up for Thai SDR money for November, we titled it Kasikorn Bank and Advanced Info Service to extend their bullish momentum. So for the November performance, it was quite mixed. The top gainer was Delta Electronics, which was up 9%. top loser was Siam Cement, which tumbled 12.6%. For their current trends, most of them are currently in the range consolidation, which are Airports of Thailand, CPO, Gulf Energy, as well as Delta Electronics. For those in an uptrend, they are Kasikorn Bank and Advanced Info Service, while PTT and Siam Cement remains in a downtrend. In terms of outlook for December, I expect most of these SDRs to be in a range consolidation. Kasikorn Bank and Advanced Info Service are expected to extend their bullish momentum, while Siam Cement is expected to see some further downside continuing on its price weakness seen in November. So first up for Airports of Thailand, currently some still looks like in a bit of a range consolidation, mostly between $60 to $64 area, where above 64 we have the breakdown level as well as the downtrend resistance line. So we expect some sort of a price consolidation to take place in December. Then for CPO, it's quite sideways as well since September. We expect range consolidation as well, where price will likely remain above 60 baht, which was a previous horizontal resistance breakout level. But we expect the price to continue to find some resistance above 65 baht. And as for PTT, price is overall still in the downtrend over here, but currently finding some support at the about 120, 121 baht level. But we are still seeing price finding rejection from the downwards resistance line. So I think price action still remains weak, but we could see some sort of a sideways price action where price is kept between 120 to about 131 baht area. As for Gulf Energy development, I think overall for now it's doing a bit of a sideways consolidation after a strong run, a bit of a pullback since October, but price remains fine. Price remains supported above 60 to 61 baht level. So we expect some sort of a sideways consolidation to continue, possibly to do a bit of a bull flag consolidation for now. Next one for Kasikorn Bank, we still remain positive because price, looking in terms of price action, it kind of consolidated most in November. Then we expect price to break out of this bullish flag in December and likely to retest the recent high at about 159 baht level, or it could even reach higher highs as well, given it's currently in this strong uptrend. As for Siam Cement, we can see from the chart is price action still remains rather weak, still trading at towards the downside of this descending broadening wedge level, as well as in November there was a breakdown below the support level at about 195 to 200 level about there. So we expect continued downside, possibly retest the trendline support, which will bring price closer to about 165 baht level. Next one for Advanced Info Service, we remain bullish on this counter in December, because looking in terms of the chart, it's currently consolidating this ascending triangle formation with neckline resistance at about 295 baht level about there, forming higher lows along the way. So there's still bullish price action when we expect price to break out this consolidation in December to reach higher highs. As for Delta Electronics, also very strong uptrend this year, but however we've seen a bit of a profit taking recently, where in November price price sort of dipped after a strong November. So we expect some sort of a sideways consolidation for the time being, where price is likely to trade between about 131 to 150 baht area about there. Yeah, so that's all from me. I'll hand over time to Paul to talk about the Singapore Weekly. Thanks.
Yeah, thanks, Dean. So we just run through the usual, some of the key macro data points for investors. Just take note. Next slide. So in Singapore, we had retail sales. So still very sluggish in Singapore retail sales. It's partly growing 0.3. Supermarket is doing a bit better, but I wouldn't say it's like extremely strong. So consumer spending in Singapore is still generally soft. For construction awards, it's still a very robust outlook for the construction industry. Year on year for the month of October, I think it was down about 7%, but the monthly numbers are very volatile. So if you take for the whole year up to October, it's still up almost 40%. So construction contracts awarded at record levels. So the trailing 12 months is around 44 billion. That means these are contracts awarded over the past 12 months compared to pre-pandemic is about 35. So it's like almost 25% higher. In terms of the US data, we got some payrolls. Of course, it was generally within expectations. I mean, government and healthcare was about 50% of jobs versus 65 on average. But the numbers are a bit hard to analyze because the prior month was only up 36 because of the weather, because of strikes. I think the only one data point that was a bit weaker was the unemployment rate was just one tick higher than expected of 4.1. But yeah, in general, you can read it like it might provide the Fed some cover to, sorry, not raise rates, to cut rates in the upcoming December 18 meeting. Yeah. Next slide. So I'll move on to our usual tactical views. So for the next 2 weeks, the news will be all about the central bank meetings. Next week will be the Fed. This week we will have ECB. I think you also have RBA, Reserve Bank of Australia. You have, I think, the Switzerland National Bank. So there are a couple of central bank interest rate meetings. But the one, of course, we're focused on is on the US. So the market is pricing not 90%, it's a 85% probability of a rate cut on 18 December. So Powell, so one of the things to note was last week Powell also mentioned that the economy and inflation has been a little bit higher than the September projection. So just to dial back a bit, September there was their FOMC meeting. So every quarter is a bit more different because they normally give the dot plots, of course, the famous dot plots, and they will also give economic projections. So what he's just trying to say is that economy and inflation is running ahead of their September economic forecast. So it can be a bit more and he added that they can be a bit more cautious. So in a way, just indirectly telling us that in the next meeting on the 18th, you're probably going to get a hawkish rate cut. So there's still going to be a rate cut, but what it means is that the dot plots will be higher, and also his guidance for rate cuts will be also not as low as before. But I think the market has already factored in. So in the September meeting, the dot plot was for 4 rate cuts. So maybe he might push it back to 3 because the market is pricing 2.5. Our base case is 3 because we think the reason why we still think there'll be at least 3 rate cuts in the US is number one, inflation. We think the data will start to slide sharper in the first quarter of next year. The next 1-2 months still be hot. And secondly, even if you have a Trump administration, anything that he do like higher tariffs, removing immigration, all this, the impact you can only see is probably only in the second half of fourth quarter, the impact on inflation. And the Fed already said they may not want to preempt this. And, rate cuts is something the Trump also wants. So we still think there's going to be rate cuts coming into 2025. But the main one to watch will be this week on Thursday, there will be the European Central Bank. So the expectations is that they're going to cut 25 basis points. Some are even going as far as 50 basis, but I think the base case is 25. I think in Europe, the conditions are still weak. If you look at the latest data last week of German industrial production, it is down 5%. And this is like 17 months, almost 2 years, I guess, in terms of weakness in industrial production. And the market is expecting in 2025 for at least 5 rate cuts. So why this is important, of course, now that we are a big investor in Europe, but because we still like Cromwell REIT because we think they have attractive yield. The portfolio is stable, even though the last few years you had a war and hike in gas prices. Their occupancy is still like mid-90s, and then with 5 rate cuts possibly next year, and then 3 already done and the 4th one coming. So you're going to get like almost 9 rate cuts over the next 2 years. So that's why we are positive on Cromwell REIT. In terms of events to watch, there's the US CPI, and then there's also the ECB rate cut decision. The CPI will really I forgot to put the year-on-year estimates, but that will probably determine the final data point before the Fed meeting on 18. So of course, this month no more corporate webinars. Everyone's on holiday, but we do have our usual quarterly strategy and stock picks on the 4th Jan, and then the US session is on the 9th, and we also have one REIT lineup. But yeah, possibly there could be more as the year approaches, as the January approaches. Next slide. We'll just run through some of the the charts on the data points. So if you look at this line, the red line, which is retail sales in Singapore, hardly doing anything. Just hovering around zero. I mean, yeah, and construction has been really strong. You look at the blue line. So the blue line is construction awarded. That means those projects they announced. Next year could be even stronger because next year you have T5 and the 2 integrated resorts. The red line basically payments. That means the actual work done. Because after you award, when the work is executed, it take a few months. Then you see the payments. That's the red line. Next line. If we move on to the US jobs, the one on the left is just to show that the vacancy to unemployed is so the employment is actually not improving in the US. You notice the amount of vacancies to unemployed is actually lower than pre-pandemic. Likewise for the unemployment rate. Then on the right is just to show that it's all about the government. So government is really either buying jobs or buying votes. I mean, depending on how you want to phrase it. But in the past, government-related jobs was pre-pandemic, maybe about 30 or even 40% at most. Now it's about hovering around 60%. So it's all about the government supporting the US economy. Next slide. Then for German, the blue line on the left is just the German industrial production. It's below zero for many months. And on the right is just a reminder, Europe lost out to the US in terms of digital competitiveness. I mean, in terms of Facebook and so forth, and semiconductor. So right now they're probably going to losing their engineering edge. You're talking about autos to China. So the shaded bar here is basically the trade deficit that China had with Germany when it's the bars that is pointing downwards. But you can notice now China is even having a trade surplus with Germany. So that's what we mean by losing engineering edge in Europe now, because Germany is the best exporter. Next slide. This was supposed to be done last week, but because I was away, so this is just to show the performance of the portfolio. We were generally flat. I think because banks did so well, banks are like 40% or 50% of the index. So I think probably every fund manager is probably also underperforming. But anyway, what hit us was the REITs and some of the aviation stocks. Although we had UOB, but it wasn't enough. Because by default, this portfolio is rough. It's just a rough computation. Everything is 10%. Next slide. And just to give you a flavor of what were the sectors that did well. So banks did very well. They up like 9.7%. On the right, that was the strongest. All the REITs were sold down. You can notice here, real hospitality, industrial, office. Take your pick. All the REITs were sold down. Then on the right here, you notice on the top half is all the mid-cap names. So the best performers were Altair, LHN, Olam. The losers were Yoma, Frasers Logistics. The bottom are this, just for your reference, on all the STI component gainers and losers. So the one that did well, of course, all the banks, SGX. The one that lost out were all the REITs. I think this is, yeah. Next slide. Oh, sorry for the audio again. Yeah, not sure why this. Yeah. Okay, so this is just to show you the asset classes that perform. All these are in US dollars. So for Singapore on the far left, so Singapore was generally up 3%. For the year it's 13. Again, the US are the best performers this year. I mean, US is up almost. Take your pick, S&P 27, Nasdaq 28 for the year. Last month was exceptionally strong. Last month, what didn't do well was, of course, the REITs. So REITs in US dollar terms are down 12% for the year. Yeah, this is all for your reference. Then ETS, bonds, commodities, all that, just for your reference. Next slide. Then this is just a comparison of performance in Asia in local currency terms. So you notice that the best performing asset class is really generally, I think, Singapore financials. If you look at the year to date, so the banks are generally up about 30% this year. You add in the dividend yield, maybe at the start of the year, maybe 6.5 or 6%. Banks are up almost 40% this year. And they are obviously the best performer for the whole Asian region in local currency terms. Yeah, because this excludes dividends. This is just the price gains. The next best performer was actually Taiwan. The worst for the year was Singapore REITs. Yeah, next slide. Okay, just two more ones for me. The Phillip on the ground, where we will give you just although we don't cover, but we attend all these meetings, so just to give everyone a flavor of the analyst briefing. So SingPost 1.3 3 billion. They run the Singapore Postal Office. They also have Australia assets. So the key, the event here was last week of last Monday in the morning. They had this. They disposed the Australian business for enterprise value, means including the debt of almost 900 million. Inside Australia, they have a FMH, which is a 4PL, Couriers Borders. This excludes freight forwarding. So there's probably another thing that they're going to sell, which is Famous Holdings. Not sure what kind of valuation they can get, but there's still one more asset that they can sell. Since they sold everything in Australia, this is like the orphan business that they always already said was non-core. The impact is that they will get a 300 million gain, and the NTA will jump to 70, around 70 cents roughly. Of course, the main question that all the analysts, everyone was asking is like, what next? I mean, Australia was supposed to be the core business. Then after Australia, what's next? So the management didn't want to answer. I mean, everybody asked, I also asked, but I think they would only do it until the strategic review for the Singapore Postal is completed. So in terms of my comment, I think it's for me at least, this deal to me, I think was a bit of a myopic deal. I think very short term, because if you recall, they only just acquired Borders Express only in March. Then after 6 months later, they're selling everything. So for me was I would have preferred to keep the Australia assets, and if you want to unlock value, you can just sell SingPost Centre. And the postal review that they were going to do was already going to unlock value. So the postal review was because the postal business in Singapore for SingPost is losing money. So there's going to be a review. My guess is that I don't think the authority is going to inject any money, but because right now they have, I think, 40 postal offices. And some of these postal offices, there's hardly any activity. Some of these are for community service, like selling stamps, commemorative stamps. I mean, I'm not saying that it's not important, but not to have a post office box just for stamps. Maybe that I think their underperformance is mainly because of all these postal offices. So there could be a review of that flavor of that. Then we thought it was a bit myopic because they did all this because there's going to be synergies coming up. Because with the 4PL platform, you basically can, because 4PL is basically like someone will nominate us FMH to handle all the logistics. Then the synergies was that FMH could use their own assets rather than use third-party warehouse, third-party courier service. They could have used their own internal, but that was supposed to be synergies, but I mean that's all gone now. Excuse me, sorry. So in terms of the outlook, for us, I think the stock is still attractive, but I think in the very near term, I'm talking about 1-2 months, until March where they complete the deal, I don't think there could be anything moving, because even if they announce results, I mean, nobody cares about the results because Australia going to be sold. Nobody cares about the postal business because it's going to be a strategic review. So I think I just worry that in a very near term, 1-2 months, there could be not much movement in this stock. But March, of course, then when they complete the deal, you will get there will definitely be a special dividend. They mentioned here, but just that not sure how much. And then after this deal, there will be a net cash position. So that's the other positive. But the other thing is that we're not sure when the next catalyst after this sale or this special dividend is the postal review. But we're not sure the timing. My own guess, again, this is purely a guess, is that it will be only after the elections. And it's only after the postal review can they make a sale on SingPost Centre, which is valued about 1.1 billion. I think on the books it's valued about 900 million. So you can get a gain on it, and of course they're going to sell. But of course, it's not good in the longer term when you sell everything, right? Sell all the furniture, everything, yeah. But so there should be some, that definitely will be an attractive dividend, in line with the whole Singtel plan. Singtel's a major shareholder, so Singtel's plan to monetize everything. So I mean, no stranger, there should be some special dividend coming up. Next slide. So next one, just the last slide for me. It's Marco Polo Marine. So for Marco Polo, they had an analyst briefing on their second half results. For those who don't know, Marco Polo they do ship chartering, like your AHTS vessels, and so forth for the oil and gas industry, and now for the renewable industry in Taiwan and in future Korea. So the other business they do is shipbuilding and repair work. They have a yard in Batam. These are the shareholders. The earnings was down 11%. It is not so much a reflection of the bad operating conditions. It's just that they have 3 docks, and one of the docks, the shipyard docks, dry docks, they were using it to build this big vessel called the CSOV. So this CSOV, if I'm not mistaken, it's about 40 million. But they don't recognize any revenue because this CSOV is going to be built for their own use. So in the meantime, now while you're building, you don't generate any revenue, and then you can't use the dock for other work. So of course, the earnings is going to be hit. And there was one anomaly too. There's actually, I mean, it's amazing but true. There's actually labor shortage in Batam. I mean, because a lot of the skilled workers all went to other countries. There was also some FX loss. So in terms of the chartering business, they still expect OSV, which is like your AHTS, the rates to continue to climb, more gradual than the last 2 years, but still rising. You know, at the peak, you know, during 2014, sorry, 2007, I'm guessing the date, when all the OSVs were hot, the peak was $3 per horsepower. So now it's about 170. And then they still see the wind farm opportunities because now the demand is not just from oil and gas, it's also for wind farm. Because when you want to install a huge offshore wind farm, you know, you still need a vessel to carry the installation work, to carry crew and so forth. Then they are also building the 4th shipyard dock in the February. So anyway, in conclusion, the stock looks cheap because it's a one-time price to book, but don't expect any bounce in earnings until the 3rd quarter, their financial year of 25. Sorry, 3rd quarter calendar year of 25, because that is when their CSOV is completed, this huge vessel, which we think they are charging maybe 45,000 per day. If you do some rough estimate of profit, they could generate maybe 5 to 7 million profit, which is huge. I mean, which is probably like 20% to 30% growth for them in earnings. But this will only kick in 3rd quarter calendar 25. And then the completion of the 4th dock, which also will raise their ship repair capacity by 25%. So that will be another earnings driver. But I think all this will only come in 3rd quarter. So this stock, the outlook is good, but I think just have to wait because they are in the investment stage right now. Yep. Okay, I think that's it for me. I can move on to Q&A. Yeah.
Yeah, maybe I'll just take some of the, I think I got 2 questions for me. First one, yeah, regarding the target price increase for the 3 banks, yeah, asking why is it, like, what does this mean by the rollover of the valuation? Yep, so we're just rolling over, it's not it's just the book value valuation, yeah, book value. So we're just rolling over the book value. So that's so previously, I think the last update I gave was, you know, in November, October. Yeah, so I think since it's coming to a year end, so I guess, you know, it's good to just update it for the new year. Yeah. Well, one more asking about, you know, any new any new price target for DBS. Yeah, we do have actually new target prices. I should have done a slide. Apologies on that. But I will just type the answer in for you as well as answering it here. So just to reiterate again, DBS's target price for us now is $44.70. OCBC is $18.80, and UOB is $39.70. Yeah, so it's accumulate for all 3 banks now. What is the outlook? I think I've said it earlier, but I'll just repeat again. Mainly for the 3 banks, we look at it to be quite positive. You know, with the lowered rate cut expectations coming in, I think this will be beneficial for the banks because they will have sort of a softer decline in their net interest margins and net interest income. But you know, apart from that, we will see their fee income still going strong. You know, we are expecting to see double-digit or at least high single-digit going into FY25. And furthermore, you know, if you're looking at the 4th quarter, we also see that you know, the trading income should be pretty healthy as well. We saw a very substantial growth in trading income for the previous quarter, in 3rd quarter. So for 4th quarter, you know, with the capital markets turning more buoyant, you know, we could see this continued rise in trading income and trading volumes. So, you know, that should also benefit them. And last but not least, you know, the loans growth recovery, we have seen it come in, although, you know, interest rates have not really declined much, but I think we will see the loans growth recovery coming from the MAS statistics that we have seen, you know, is very healthy, around 2.7%. So I think this will also be beneficial for the banks. Yeah. And last but not least, I think the most important point for any investor and shareholder out there is the dividends. it's not just DBS who's saying that they will return capital, right? So now all three banks are saying that they will be looking at returning capital, or there will be some form of capital management. Yeah. So DBS, said that regardless even if their dividend payout ratio goes above 50%, they will still be maintaining that 24 cents per annum increase in net dividends. So that's good. And also, they came out with their and mentioned, the amount of their share buybacks, which is 3 billion, but they haven't really stated the timeline or when will it come in or how will it be, affected. And your UOB, let me go UOB first. UOB also said they will be doing a share buyback program. Not sure that the amount or the timeline as well, but at least they did commit to that, and also that they will be, very aggressively managing capital, which I hope it means that they will be giving a special dividend or even higher extra dividends. And last but not least, OCBC, which is probably the most secretive bank among the three of them regarding capital management. They also said that they will be looking at trying to manage the excess capital, because they do have the highest excess capital compared to the other two banks. It's around 4 billion Sing dollars for OCBC. So I'm not sure, even if they do manage to privatize GE, it still leaves them with around 2 plus 3 billion. So there's still a huge amount of excess capital that they have to do something with it, and I would hope that they will be returning it back to shareholders. So that's probably the reason why the banks will just have another good year going into FY25. Okay. Suddenly a whole bunch of questions came in. Let me just look at it first before I answer. Okay. What is the likely correction for banks given the run up? I think the banks will probably still be performing well, because a lot of the investors and shareholders are just staying in for the dividends, right? Singapore banks are very famous for paying good dividends, and now with them saying, as I mentioned earlier, that they're going to be actively managing capital even more. I don't think anybody's going to pull out when they're going to give back, right, to the shareholders. So I don't think there will be much correction per se. Will slower rate cuts mean lower loans growth or more defaults for banks in 2025? The banks, if you look at that, let me talk about defaults first, right? I think defaults, you're looking at the provisioning level, allowances level. Even though rates were extremely high for the last year or two, right? The provisions and their credit costs were still maintained, because Singapore banks, no matter what you say, they are very safe, right? So they are very prudent with what kind of loans they take up, and they make sure that they're either well collateralized, or it's they have some form of taking back the loan amount, right, before they take up the loan. So they take very not as risky loans as compared to maybe the US banks. Hence, they are keeping their provisions, allowances, as well as credit cost levels quite low. As for the loans growth, so we don't really see, with loans, with the rates actually coming down, we don't really see a sort of increase in the defaults for the banks going into 2025. As for loans growth, I think we will not see loans growth recovering, at like maybe double digit or very high single digit, right? We will see it improve from 2024, but I think it'll be a sort of a more muted, slower growth, but there will still be growth in loans. Yeah, I would be expecting, maybe around a mid single digit to a possible, high single digit level for the loans growth for the banks. But yeah, I would assume that slower rate cuts would does mean sort of a slower loans growth pace. Where would the higher loans growth of the banks come from in 2025? I don't think there's any specific segment or particular where we will see this loans growth increase. I would say possibly it would come from the housing loans. Housing loans have been doing very well for the banks. I think possibly the SME side, especially this will be affecting UOB, because the SMEs will be more free to take up a loan as compared to when it was extremely high, because SME loans are really pegged to the rates, right? So that could be to that would probably benefit UOB quite a bit. And I think another segment, if you look at geography-wise, I think a lot of the loans growth could possibly come outside of Singapore, which is why, all three banks are pushing quite hard to grow outside of Singapore, right? They're going into, like, DBS is going to Taiwan, UOB is going into the ASEAN, outside of ASEAN, and then OCBC, they do have some sort of exposure into Indonesia now, right? So I think that's where we'll see the loans growth, if you talk about geography-wise, coming from. It's outside. I think it'll be coming, quite a lot of it will be coming outside from Singapore. But Singapore will still, show like maybe mid-single digit kind of loans growth. Do you think potential for stock split for DBS, especially with current high prices? I don't think so. I really don't. I'm really not sure about this. I don't think they will do a stock split, especially so soon after they gave the 1-for-10 stock bonus issuance. I think that was only like a year plus ago, right? So I don't think they will. Highly unlikely they will do a stock split anytime soon. But yeah, it's really hard to predict whether or not whether or not they will do it or not. What is happening? So, you have two questions about the GE. Will OCBC out offer any updates? Yeah, there's no updates. For GE, they haven't really said anything. We've asked the management. Management also says that, they have increased their. I don't think the timeline is up yet for them to give a new offer. But yeah, when it does, then I will definitely do give an update on the GE. Suddenly quite a few questions. What is the standing of Singapore banks in relation to those in C, and what's the opportunity and threat? I would think Singapore banks are generally more, I would say they are more prudent, so they are safer. So they do, take up loans that, as I said earlier, right, which is why their credit costs and their provisions and allowances are all quite low. It's because they really focus on making sure that they get the right loans. And also they give, among the other banks in ASEAN at least, right? They do give the highest dividends. So they're really quite good at giving back their capital, giving back excess capital, right? And they're not shy to just give back to the investors and shareholders. Okay, okay, yeah, I don't think this one is for me. Yeah. Yeah. Okay, the GE one, yeah, I'll get back to you on that. I don't think there's any updates, so I can't really give any updates on that for the GE question. Okay, I think that's all for me. I will pass it on to the rest of my colleagues. Thank you.
Yeah, thanks, Glenn. Yeah, so what is the office space demand in Bangkok? Yeah, so for Bangkok, it's also a flight to quality trend where we see a lot of companies, they want to position themselves at a higher quality kind of office building or office space. Is similar to the rest of the world as well. So for that one Bangkok, their 5 office towers are really, really premium with very high end finishing as well. So they're going to benefit from this flight to quality. So the work from home trend in Bangkok, and it's now at least 3 days work week in office. So that is roughly similar to the rest of the world as well. And right now, Frasers gearing net debt is about 75%. Yep. Yeah, so just a recap on the one Bangkok specifically is that right now their office space for those 2 buildings that have already ready is about 55%. Yep. So that will slowly ramp up. What's next for Suntec REIT if we reject the offer? So basically now, because the Gordon is a lean tank, they own about 31%. They will need to they will need to receive valid acceptances of more than 19% to make this offer unconditional. But the thing now is still a conditional offer, and at the current share price of about $1.21 as compared to the offer price of $1.16. I mean, some investors will definitely reject the offer, and as a result, they will maintain their just 30%, and nothing will happen effectively. So from our perspective is that we have a buy call on Suntec REIT still at $1.36. Suntec is still trading at a huge discount to NAV as well, of over about 40% discount to NAV. The weakness now in Suntec's portfolio though is their overseas assets, where we see the vacancy creeping up for their overseas Australian and UK properties. While Singapore, the retail and office still remains strong. Office still have about 10% positive reversions, retail 20 over percent, Suntec still more rental reversions as well. So for that, it's still strong. The convention center a little weak from the slower events pace expected next year as compared to this year as well. So yeah, it's really a mixed bag, but all in all, we still think it's definitely to reject the offer. Yeah, we have a target price of $1.36. Yeah, so that's what's next for Suntec. Hi, you mentioned about the properties. So I think you mentioned about the properties by Frasers Property. Yeah, the Grandeur Southon, the Milano and Luzon. Any idea what is the restriction for foreigners to own these properties? Yeah, so actually these properties are only Thailand residents can buy, or Thailand citizens can buy. Foreigners cannot own these properties, and the properties are only for owner occupation. You actually not supposed to rent it out as well. But according to the agents that we met on the ground, there are some loopholes. Like let's say if you own a 51% stake in a company in Thailand, yeah, but generally, yeah, foreigners are not able to own these properties, so it's only for Thais. Yeah, and why the Singapore REITs are not doing well despite interest rate cuts? Or this is in anticipation of lesser number of rate cuts in 2025 in view of inflation times. Yeah, you're exactly right. So just a recap that in the months leading up to the general election, we saw REITs rally, the share price rally by about 15%. And since then, the REIT share price have come back down and they are not doing too well, like you mentioned. So yeah, it's definitely one of the reasons is the anticipation of fewer rate cuts in 2025 that will impact the REITs. But we are still overweight REITs because we think despite the fewer rate cuts, REITs will still benefit from lower interest rates. Just that the impact of the pace of how much they'll benefit because of the slower rate cuts will definitely be slower as compared to originally anticipated couple of months back. So that is hurting the REIT share price a little bit, but overall we're still expecting some DPU growth starting next year, 2025. Yep. And eh, do you expect coming results for S-REITs good? It's been a long wait for good news. Yeah, so well, like I just mentioned, we think we do expect the S-REITs performance to start improving from lower interest rates. With operational like the operational conditions remain stable, like the top line can improve from normal rental escalations. The REITs can definitely pay more DPU from lower interest rates as lower finance costs will basically just deduct lower finance costs, and as a result the distributable income will be more. So yeah, definitely higher DPUs, or rather we anticipate higher DPUs next year. So yes, we do expect coming results of S-REITs to improve. Yeah, this year we still saw most REITs having higher interest expenses year on year as well. So this year so DPUs were flat so far. Any thoughts on capacity preference? Should we take up the price or not? Yeah, so we ran through Capital DC's the preference offering quite in detail over the past 2 weeks. let me just see the Capital DC share price out. Or right now the share price is 220, so our call is 214, so $2.14. So from what our target price, it just means to sell Capital DC because of the overhang of the private placements. And but the situation is, let's say if you are still holding Capital DC and you are entitled to the preferential offering, you should definitely take up the preferential offering, because if you don't, you'll be even more diluted than if you don't take up. You basically, if you are entitled to a preferential offering, you should take up the preferential offering. Yeah, because if you don't, you'll be diluted by not taking up the preferential offering, because we did a theoretical extract price, so that is about $2.18, and based on our target price, it is at about $2.14. Yeah, so our call is still basically a neutral, but based on the current target price of 214, yeah, you should just sell because of the overhang from the private placement. Yeah, but just to reiterate, if you are still holding and if you are entitled to the preferential offering, yeah, you should definitely take it up. Uh, Their KDC REIT, so next Tuesday, PO issue starts trading. Likely its prices will fall to $2, right? Yeah, we think definitely the share price will drop, but maybe not drop until $2 immediately, because after all the preferential offering price, if I remember correctly, is $2.03. Yeah, so it's it's unlikely that the share price will drop even below the preferential offering price post rights issue, but definitely we do anticipate it to drop. Yeah, what's the outlook for retail sales given the flatness of retail sales presented? Yeah, so over the past year, we saw most REITs there. So they had year-on-year declines in tenant sales, especially downtown malls. But the downtown malls are the ones that managed to report double-digit or even some in the 20s. For instance, Suntec REIT reported double-digit retail's rental reversions. So from our perspective, we think is that there are a lot of other overseas retailers that are trying to set up shop in Singapore, and there are a lot of food concepts as well, like the Chinese. Like recently, there's a lot of boom in. Sorry, excuse me. A lot of boom in like the Chinese concepts like mala, all these spicy hot pot kind of concept. Yeah, excuse me. Yeah, so all these will there is demand to try to set up business in Singapore. So in the near term, we still think there is potential for positive rent reversion despite the flatness in retail sales, like you mentioned. Yeah, but for suburban malls, we noted that tenant sales are still improving year on year slightly as compared to the more luxurious downtown malls, where basically luxury sales are being affected, like we saw worldwide as well. Yeah, there is a decline in luxury sales. Any particular reason for Frasers Hospitality Trust spike in price? Yeah, I don't see any particular reason. Yeah, let me check whether there's any announcement, and I'll get back. Yeah. Yeah. So Suntec was our TP. Yeah, we have a TP of $1.36. Yeah, I did a presentation on it. Yeah, you can take a look at YouTube and watch that back. Yeah, and definitely the offer price of 116 is not a reasonable price. And yeah, definitely the Helios, which is the investment vehicle of the Golden Thing, they do not have any intention of taking it private. Yeah, if they offer at $1.16. Yeah, that's all for me. I hand over to my colleagues. Thanks.
Okay, yeah, thanks, Darren. So, let me just try to answer some of the questions. What's happening in Singtel? Why is the price falling? Or where do you see the support? So for Singtel, there isn't any particular bad news. I think the share price is probably up already 25% so far this year, or 23, 25%. The only thing was maybe the results was really nothing new. So the first thing to take note of is when you look at Singtel, assuming that the target price is I don't know almost 150 or almost of it is at least more than half of the value of sum of parts for Singtel actually comes from the sorry, give me 1 minute. Comes from from Bati itself. So and if you look at Bati's share price is really up 50% this year. So let's say we have a target price of sum of parts of about 3 something, almost $2 of it actually is Bati itself. And Bati has been up 50% this year. So and it's starting to move sideways because Bati did well because they were going to raise prices. So on paper, their stake in Bati is almost 40 billion on paper. But most of us, when we do some of parts, we actually deduct 20% off. So that's one reason. Then number two, from the results, there wasn't anything new in particular. I think that's the gist of it. The most positive is they are still doing cost cutting in Optus. And they raised their dividends. So in general, everything was within expectation. So that's why we don't see anything. The near-term driver for the share price is some of monetization. I think they hinted strongly that they will probably be looking at maybe selling some of their stake in Bati again. But I think investors also and also Bati might be raising their dividends. Because this is a very complicated structure, but anyway, Singtel's stake in Bati is mainly through an entity called Bati Telecom. That actually is owned together with the original Bati shareholders, the Sunil Mittal. So that entity actually have to borrow a lot of money when they bought a Singtel stake, and because of that, although they sold it, there's a bit of pressure because of the high interest rates. So it's a bit more complicated, but in general, there's nothing new news. Sorry, just to answer your questions and not to beat around the bush. Yeah. How should we be worried about the 10-year government yield trading below the 2-year? Does it mean that bond traders are pessimistic on Singapore? What are the potential winners and losers for this phenomena? Yeah, okay. So when the 10-year bond yields is higher than the 2-year, or like a 10-year FD is higher than the 2-year, basically it means there's an inversion. Inversion doesn't cause a recession. I mean, it's just investors' view. We had the inversion, if we recall, in the US, and everyone panicked that there'll be a recession, and that didn't happen. I think, not to say this time is different, but I think it's also a reflection of direction of interest rates, and number one. Number two is also a direction of inflation. So if you think inflation is coming down, the yield curve can also be inverted. So we don't think it's because the weakness is there. We also think it's also a lot of people might be locking in the longer term bond yields because they know the Fed globally and so forth are all cutting rates. So even the banks themselves also are trying to lock in some of these longer term yields, but I think they are locking in more the US dollar because most of their excess deposits are in the US dollar. So for me, it's not a signal of recession. It could be a signal of just lower inflation, of course, slower growth, but it's not a signal of inflation. Yeah, I mean that's my own thoughts. And Poem has recently started SDR for Hong Kong China stocks. Should you be covering it like Zain is doing? We won't cover because we have a Hong Kong team. And we also have a Thai team that does all this. And secondly, if we cover Hong Kong, I don't think anybody want to listen to us. I mean, like what do we know about Hong Kong? So it's like a Hong Kong analyst covering Singapore. I don't think anybody going to listen to that Hong Kong analyst. Likewise for us covering Hong Kong. US, you can still do it because US, there's so much, it's really so huge at the market cap, and there's a lot more information. Yeah. Key things from PSR. Yeah, my apologies. I didn't go through that because the analyst that covers Helena, she's not in. She's on medical leave. So we'll have to take note of that, and then hopefully she can answer you through our Owen's community chat. Likewise for Salesforce. So as you know, our analyst Ambrish has left. So our US team is virtually at the transition now. Sorry. I know there's another question on Google Cloud. So Apologize for that. She's not in today. And also for Bobcon, I'm not sure if Yip Man can answer. Yeah. So our US is basically on a it's basically we're gonna have a bit of a downtime for our US equity stock. So even in our SSP, our US equity team will only be presenting for a short while because we are there's a bit of downtime. We are transitioning the whole team. Yeah. How do you reconcile Trump 2.0 policies of tariffs resulting in higher inflation, yet Trump still prefer a low Fed fund rate? Can both phenomena coexist? Uh, it shouldn't have. Okay, so anyway, if yeah, so the tariffs, yeah, it shouldn't have, but he can still do it. So the funny thing is that even with high, yeah, I think the worry now is that the loss of Federal Reserve independence. So I mean, not to be academic about it, but I think it's pretty that if the central bank loses independence, then everybody wants to get drunk drinking, and nobody wants to be the driver. So you need to have a driver. So if the Fed is not independent, then you can coexist both in the very near term. That means you can have high tariffs and also, but and also even high deficit spending. So the one thing in theory, deficit spending shouldn't be good. I mean, the government in the US is spending a lot on deficit, but you notice interest rates is still coming down, and also inflation is still coming down. So I mean, if I'm down, I mean, if from Trump's view, I think expanding deficit actually doesn't hurt the US economy. It actually helps. If you look at the stock market performance, look at interest rate, actually having a large deficit spending doesn't hurt because other countries are also just as bad. So, but anyway, just to answer it, it shouldn't exist, I think. But in the near term, it can. That means basically you just overheat the economy. Yeah. And with all this liquidity coming into the US, I don't think the investors are going to go and buy euro bonds because because inflation is a bit higher, the real interest rates are coming down because there's really not much alternative outside of the US. So I don't think there'll be a huge reversal of capital because if this happens, then the stock market will be like extremely buoyant. It'll be like on steroids. I mean, like it's like high deficit spending and low interest rates, like the best cocktail you can have. Yeah. What's the outlook for Vilma? Actually, we were disappointed. I thought Vilma should have been better. I think Indonesia was better, but I think they were guiding for a softer China. So I think they are a bit more careful. They are a bit more worried, for the for the economic environment of China. So we were disappointed because the China was weaker than we expected. Although the Indonesia is doing well, but the crush margins, they seem more cautious than we had expected. And also sugar was also worse than we had expected. So I mean, it was a disappointment, I mean, for us. So we think going to first quarter, we worry that the results may not be so good. Yeah. Hi Paul. Why is Yoma suddenly up so much last week? Any new political development? Yeah, we don't see any development. I think the share price has its mind of its own. Yeah, but we didn't see any particular news coming out from Myanmar. And just to recap, the most important news is that there'll be some elections arranged. Again, the keyword here is arrange. Whether is it independent or not, doesn't matter, but at least there is some elections. But I didn't see it. I mean, if anyone saw, no, please to type in the chat. But for me, at least, sorry, I didn't really see that. So let me just quickly run through. Okay. Sorry, give me a second. Hi, Paul, for the two US market, two of your analysts have left. Yeah, two of our senior analysts have left. Can you share who will be filling? Yeah, we are in the midst of hiring. So please bear with us. I think there will be some downtime in our US research. Paul, is the logistics center next to the SingPost center part of the SingPost? Yes. So in the SingPost center there is sorting. I think it's a letter sorting facility. Which excuse me, I think Singtel can actually move this because it's letter sorting, right? I mean, how many people send letters? So this letter sorting, they can actually move it into the TUAS. They have a TUAS facility that does parcel and letter sorting. So so I mean, that's to address the question. So it doesn't mean they cannot sell it. They can sell it and still move. Of course, they have their offices. I mean, they can just rent it back. So that part won't affect them. It's just the valuations, because whoever buys that SingPost center might want to convert that industrial portion of it into commercial, that means office or what. So that part we do not know, because whoever buys it, if they convert letter sorting to an office, then they'll get better valuations. But right now, I think the valuations for that is 1.1 billion. The next question, the authority should take back the provision of postal service lah. Yeah, I mean, I agree. This is more public service. SingPost not making money, and the number of SAM machines causing so much inconvenience. Yeah, I think we agree. And yeah, I think the one comment that probably SingPost saying that there is a bit of a community service inside the postal business that they're doing. So the whole restructuring on the with SingPost is to see how much community should be taken back, which means they will probably shut down some of the the postal offices. Yeah, but this is very sensitive. You shut down one, even though the person might go to the postal office for only once a year, but there'll be a lot of complaints. So my own guess, this might only be done, probably maybe after, yeah, the elections. I do not know. This is my own totally 99% all guess. Okay. Hi Paul, could the possible intention in the mind of the unvisible hands, I think we all know who that is, that makes Singtel, SingPost, etc. to keep selling their assets and return capital to shareholders to reduce the business involvement in other. Okay, so most of the GLCs are doing this restructuring. In a way, it can be justified, because like you take Singtel for instance. If you do a valuation, that means if you do a valuations of their associates, because some of these are listed, right? So if you value them, they could be at least even as much as $4. But the market will never give you that value, because to the market, you never sell any assets. It's always there. So in the next 50 years, it's always going to be there. You're not selling any party. Then got to wait, only collect dividend, especially if there's not much growth. So I think from their point of view, which there is some justification, is you have to sell a bit. You have to crystallize some of the value to show investors that this is not just paper value. I think it's almost the same like CDL, right? Although the book is like, I don't know, $12, but you never sell anything. So in the next 20 years, it's also going to be $12. You don't realize any value. So there is some merit to it, but of course, there's also a level of selling. You can't sell everything. I mean, you have furniture, sell this, sell machines, sell. So for us, they will sell some of it. They won't sell everything. So to them, Bati, the associates, they are still very core. They will sell some. Property is easy to sell. Like SingPost Center, they will sell. Singtelcom Center, the building, they are revamping this into a mix, into an integrated development into office and all that. So that one makes sense, because that whole building, the Singtelcom Center, was only housing Singtel, so they would redevelop the whole building and capture some value. So that one makes sense, and cutting costs, of course, that one's easier. But I mean, if I'm the CEO, I'll do it. Then the next CEO that come in, then he's going to figure out what furniture to sell. But yeah, anyway. So this is not only unique. So you're seeing Olam also doing it. Of course, Keppel is also doing. So the whole GLC is doing it. I think to a certain extent it makes sense, but cannot until sell everything. Yeah, still need some furniture to sit on. Okay. Oh yeah, it's a slide for Marco. Yeah, my apologies. Yeah, my eyes, I didn't. Sorry for that. It's actually Marco Polo. My mistake. Sorry. Yeah, I think it was mentioned because we do all these slides on the weekend, so sometimes cannot see also. Yeah, sorry for that. Yeah. Uh, uh, can you explain the disparity of Marco Polo Marine versus cash flow? MPN as a net cash. Oh, okay. So for stock analytics, it doesn't come under us. So it's actually by a third party provider. So we will have to get back to the third party provider on the stock analytics. We actually don't provide it. Even for poems, we take it from a third party, and we can't really check every single data point. So if you do see this disparity. I mean, it's not unfair to ask everyone to go and check for this, but if you do see disparity, do flag it out, because sometimes we can't see because it's not from us. The third party provider does it for us. So yeah. I read your morning note. Overweight REITs. Does it mean that buy REITs, sell banks, or both banks and REITs? So for us right now, I think it's still both. Yeah, but I think nearer term with the banks, because there is still momentum. There's still the dividends. Then I think we probably have to fade that banking view probably in the middle of next year. Yeah. Because this is all quite new. Because the Basel III, the big, especially for UOB, why you saw the big jump, the improvement in capital, although most people expected it, but the amount was much more, the 2 to 3 billion. So it was quite a new phenomenon. So that's why the UOB jumped up so much in just 1 month. Okay. MCL, and I think I'll move on to yeah. Any thoughts on DFI, Food Empire? Yeah. For DFI, I think it's a bit more positive, I guess, because they are restructuring, or they are selling their assets. So they're also doing that furniture selling thing. I mean, lack of better word. So it looks a bit more positive, and I think Hong Kong retail is starting to pick up a little bit. For Food Empire, I'm a bit worried because I think although they are accustomed to it, because the Russian ruble just collapsed again. Although no, Food Empire has a very long history of raising prices, but the near term usually they get some hit. So that's a bit of a worry there, because of the for Viacom, nothing new. The extension of the life recently, as you notice, there's a new news, the extension of the life of some of these where you don't have to check the for non-EV cars, you don't have to do service, you don't have to do a compulsory check. I think that might impact them a little, but I think Viacom in the near term, they are undergoing a major capex. I think they're building a new center, so that's why their dividends will be a bit capped in the near term. Yeah. So yeah, this just to give you some headlines on some of the for sets. I think Meow is not in. Can I what's your view on sets? What's your target price for it? Do you know why the share price? Okay, we don't really know in particular. Sometimes maybe they're raising capital. I really do not know to the gear. I'm not sure. But for us, we still like sets. I think we mentioned before. I think Meow calls it, but she's not. She's on MC today. I don't know what's on MC, but anyway. So for sets, they got the big repricing from SIA in April. So like we mentioned before, they got it April this year. So in the September quarter, sorry, not September, the December quarter, March quarter, you're still going to get the benefit, year-on-year earnings benefit from the repricing. Not only from SIA, but also the handling charges in Changi Airport. So you're going to get these two, and cargo is still doing well. So cargo is still growing. I mean, it's slower growth, but you're still getting I think 11-12% cargo growth based on the latest industry data for SIA and Changi. So they're still doing. So I think there's still earnings momentum for sets. I'm not particularly sure why the reason. I didn't notice anything, or maybe there's something brewing, but I'm not so sure. Okay, I think I move on to the rest. Yeah, because I think to answer, because I think we hit 12:30. Yeah, thanks. To Yikban, at least maybe he got some. Yeah, thanks.
Hi. Regarding the Broadcom question, yep, I typed in the chat as well. We can expect continued growth from the AI, 5G, and cloud infrastructure segments for Broadcom results, because they specialize in producing semiconductor solutions, for example, tailor-made chips for hyperscalers, as well as the Tomahawk and Jericho Ethernet switches. So because data centers need a lot of this kind of processing power and network solutions, so we still think that there will still be a strong demand in the AI and cloud infrastructure segments. And in their previous quarter, they have successfully scaled the integration of VMware, because previously they have acquired VMware into their business, and this led to quite big operational savings and growth. And we do think that this segment will still continue to perform well because of the continued AI revenue expansion. Yeah. So that's what I think that's what you can expect for the results this week. Thanks. Maybe I can hand over to Zane.
Yeah, thanks. But I'll move on to the TA question. So let me just share my screen. Yeah, so okay, I'll go through the Singapore and Hong Kong questions first. Then for the US ones, I'll go through if time permits. If not, I'll talk more about them during the USTA session tonight, which is at 8 to 9:15. Yeah, so also feel free, you're welcome to join in if you have time to attend. Yeah, thanks. So I'll start first with the SRT, which is this S-REIT ETF. Yeah, for now, I think, yeah, for the S-REITs, it's we're still seeing some sort of price weakness currently. But for now, recently, we're seeing a bit of a sideways consolidation for this S-REIT ETF. Currently, it's around about 73 to 75 cents for now. So hopefully we see a bit of a consolidation. If prices can break above 75 cents, then perhaps I think we can see a bit of a slight recovery towards 77 cents. But for now, I think overall still a bit of a sideways consolidation expected for now for the S-REITs. Then for next one is venture. So for venture, I think overall still seeing price weakness. Recently seeing looks like a retest of previous support breakdown level at $13.20. So I think we're likely to still see price pull back a little, perhaps to do a bit of range consolidation and just trade between about 12.80 to about 13.20 for the time being. And for next one is Mapletree Industrial Trust. So Mapletree Industrial Trust, yeah, still seeing some weakness. Overall, you can see that price lower highs, lower lows, along this downwards resistance line as well. If price breaks below this 226, 227 support, we could still see some weakness maybe towards the next key support area, which was this previous range consolidation level at around 220 about there. Yeah, so I think overall, we're still seeing this downtrend continue for now. As for SIA, I think SIA we are likely to still see some sort of a gradual upwards kind of slow price action for now, because yeah, it's just moving up in this channel for now. But previously there was this consolidation between about 630 to 645. So over here there might be some resistance. I think price might just do a bit of a sideways. It will just move up gradually and do a bit of a sideways consolidation thereafter, in my opinion. And next one is HST, which is this Hang Seng Tech. Yeah, so for Hang Seng Tech, I think for now, I will expect some sort of a sideways kind of price action as well, because price looking in terms of the recent, yeah, since this pullback over here since start of October, price action has been generally quite range bound. We're still seeing support around 71 cents over here, but some resistance at around 75 cents, and then afterwards we have 78 cents as well. So I think overall we just slightly, and in terms of volume, it has also decreased quite a lot since the peaks, the highs over here. So I will expect some sort of consolidation to actually just continue for now for the HST. Yeah, I think we need to see whether price is able to hold this 74 continuously and hold above. Then I think there's a chance for price to hit higher afterwards. Yeah. And next one, BY for Singtel. I think Singtel overall for now, it looks like a range consolidation that's been ongoing since start of October. So generally between $3 about 3.17 about there. I still think we're likely to see this range continue. Yeah, unless there's a breakdown below like 298, then perhaps next support level will be around 292. Or if there's a breakout above like 320, then perhaps price could retest about 330 highs. If not, I think for now, generally in this consolidation phase. For iFast, I think yeah, price is still moving upwards for now. since breaking above some resistance levels at around this recently at around 760. I think we could possibly see price retest this $8 to about 810 highs over here following this earnings gap up previously. Yeah. And next up is Yangzijiang Financial. So for Yangzijiang Financial, I think for now it still looks very sideways. Generally between about 39 cents to 40.5 cents. I think we need to see for price to try to break upwards, we need to see a clear break of this 40.5 cents, 41 cents level, and price holding above, then it could possibly reach like 42 cents again. So I think for now, overall, it still looks quite range bound for this counter. Yeah. Next one is Capital. So for Capital, I think price action is positive for now. Recently there was a break above this $6.75 resistance level over here. So if price can continue to hold over here, I think currently it's doing a bit of a sideways consolidation. If price can remain above 675, I think it's still positive for price to actually move higher to retest this $7 resistance previously start of this year. And for CLI, Capital Land Investment, I think still seeing a bit of price weakness along this downtrend resistance line, and as well as there was a breakdown below 277, which supported into resistance. So I think for now we are likely to see this weakness in price actually continue for the time being. Next key support level, I think is around about 262, about there. Next one is CapitaLand Ascendas REIT. So for Ascendas, I think we're still seeing a pullback in terms of the price as well as with most of the REITs still along this downwards resistance line. Previous support turning a resistance at around 263. I think we could still see price retest the recent lows about 255. If 255 can't hold, then the next support level will be closer to about 250, 251, about there as well. So I think we're still seeing price weakness currently. One is Capital DC REIT. For Capital DC REIT, I think for now, likely to see a bit of a sideways consolidation. So I think resistance is generally above $2.30. Our support is likely to come in at first level is around 215. The next one lower is about 208, 209 over here. I think for now we likely still see a bit of a sideways consolidation. Our volume is coming off. So I think we'll just do a bit of a sideways for now. I think there's quite a lot of questions on the REIT. So I think maybe I just go through the REIT index also as well. For now, the S3 index. You can see for the S3 index, generally we're still seeing price weakness. It's currently holding at this 1010 level for now, which was its previous swing low back then. But still no signs of strength yet, because it's just consolidating sideways for now since start of November. So we need to see the index actually break above this 1028 level, then possibly there could be some pickup in terms of the S-REITs. So next one is CSE Global. For CSE Global, I think for now, price, since breakout is 45 cents, price will be tested the resistance over here at around 48 cents about there. So I would expect perhaps some sideways at this resistance area for the time being. Then moving on to some of the Hong Kong counters. First up is Tencent. So for Tencent, I would expect price to find support at these current levels to just do a bit of a sideways or maybe see a bit of a recovery, because after this pullback over here, price has found support at this 395 level, previous range resistance. And we see a few like double bottom over here. Currently doing a bit of range consolidation with resistance at around 415. So a bit of sideways for now, but if price can break above 415, I think we could see some upside towards like 433. as the next key resistance level about that. This one is on JD. So for JD, also at this prior swing high resistance around 136, we seen a double bottom form over here. And then a recent price action, price broke above this 139 neckline, do a retest over here, found support. So over here, I think looking a bit more positive, but just I will expect a bit of a sideways still for now, because this $150 previous support level is likely to still act as a bit of resistance. So I would expect price to just trade between 138 to 150 for the time being for JD. Then next one is Baidu. And so for Baidu, for now, price a bit of a recovery for now. They were initially broke below this 79.60 level, but recover afterwards. Currently doing a retest of resistance at 85 for now. So with 85, next resistance level is around 88, as well as followed by 92. Yeah, so for now, maybe a bit of a sideways consolidation. If as long as price can stay hold above this $80 level, I think for now we might see like a short-term bottom, where price could do a bit of consolidation, or if can break over resistance, then we could see a bit of recovery in terms of the price. Two three one eight is Ping An Insurance. Yeah, Ping An Insurance still a bit weaker for now. Still holding out resistance at prior support at 47. So unless we can see a fair break where price could hold above afterwards, the next resistance level will be around $50. But for now, still looks like a bit of sideways consolidation where support is around $45. So it looks like Ping An looks like in terms of chart, looks like one of the weaker ones as compared to the previous few names mentioned earlier. And for 2801, it's BlackRock North Asia MSCI China ETF. Yeah, for this, yeah, doing a bit of a consolidation for now. For some recovery, I think we need to see price break above $20.60, which was this swing high level turn into a resistance for now. Yeah, then we could possibly see price test doing 160 again. But for now, just holding sideways currently. Yeah, BITO was the Bitcoin strategy ETF I shared earlier. So yeah, BITO, I think after this strong movement, because of Bitcoin prices, I think for now we're likely to see a bit of a sideways consolidation for now. Yeah. But overall still bullish. Maybe just need some time for price to actually consolidate. Then perhaps it could continue the uptrend. Next one is TA on the three local banks. Okay, first I'll start with DBS. Yeah, DBS still very bullish over here. Consolidation, breakout over 43. So I think for now, yeah, looks like perhaps could do a bit of a sideways in terms of moving average. I think if it does backtest this 43, 42.80 to 43, that is likely to find some support with the moving 10-day and 20-day moving average around there as well as prior resistance. So for now, looks like I think price could just do a bit of a sideways slight pullback, as we've seen in the past when price went up, then just did a dip, then just consolidate sideways again. For UOB, I think still for now still they're a bit weaker than DBS, a bit tested $37, still finding a bit of resistance, but I think if price can hold above this level, this consolidation level of about 36.50, then I think overall we could still expect some sort of breakout afterwards. Yeah. Since overall we're still seeing this bullish structure forming. And as for OCBC, OCBC also not as strong as DBS, but just consolidating sideways, generally between $16 to $16.60. Yeah, so I think if you can see a breakout of 1660, then I think we could see this bullish trend continue. Since it looks like a possible bullish trend for now. Okay, there's a question. Okay, I think this is a great question. If the question is if volume affects TA, then TA using price and volume of index ETF may not be as accurate compared to TA using the index itself, as the volume of ETF may not reflect the volume of the index. Yeah, I agree that it will be more reflective and accurate if you use the volume of the index as compared to ETF, because I mean index is the one that is still the most liquid one. But however, I think the limitation we have over here is that you can't buy or sell the index. Actually, you have to do so using ETF to be actually tracks the index. So I think in terms of this TA, we have this limitation. Yeah. So I think that's something we have to deal with, I feel. What's your view on ST engineering? Maybe I give a TA view on it. For ST engineering, I feel that overall, you can see that it's still in this long-term uptrend over here, in this upwards channel. In the shorter term time frame, looks like it's doing a volatility contraction. You can see volume actually going downwards, with this downwards resistance line over here. So I think for now we could see a bit of a sideways, roughly between 450 to about 465. But if price can somewhere maybe towards end of the month or maybe next year, if you can see price break above this downwards resistance line, then perhaps you could see the bullish trend actually continue for ST engineering, as long as price doesn't break below this channel support, as well as this key support at around 445 over there. Then there's also Valuetronics. I can just give a TA view on it. For Valuetronics, I think for this counter, I think it's still rough, still quite sideways. So resistance 64 cents, but positive is that we're seeing over time higher lows are actually forming along the way. We have this 58 cents, 60 cents over here. Then I think for now, probably 62 cents it will be a support level. So I think it will be slow, but overall you can see it's still in this uptrend over here. Yeah, so maybe just some sideways consolidation. If price can break over 64 cents, then I think we could see some further upside towards maybe 67 to 68 cents as the next resistance. For her, there's also a TA question. Yeah, for her, I think for now, my view is that it's trading within this uptrend channel itself, this short-term uptrend channel. So yeah, still moving up within this channel. I think for now, short-term resistance will be around 52.5 cents to the 54.5 cents swing high we've seen over here end of October. And support for now it's at this breakout of 48.5 cents about that. Yeah, so I think price is likely to just continue to trade gradually within this channel upwards. TA on LHN. Yeah, for LHN, it looks like it's at the all-time highs for now, if I'm not wrong. Yeah, for now, since there's a bullish breakout of this 40, there's some bullish price action recently, breakout of 44 cents. Yeah, for now, yeah, we could see maybe another consolidation take place. I think for now, some support. For now, some support will be the 5-day ME for now, which is 47.5 cents. Then following the next support level could be maybe 45 to 46 cents level, the 10-day ME. Over here, we've seen where price there's a dip and found support over here before moving upwards again. Yeah, so these are possible some short-term supports. Yeah, generally still quite a strong uptrend in the short term. Any insights into link rate? You can see the chart for link rate. Yeah, so for Link REIT, I think for now it's a bit of a pullback still. I believe it's in this a bit of a this downwards descending wedge or channel over here for now. But it's actually retested this prior resistance level here around 3350. So we could see some sideways over here as long as price is supported. The recent swing low at around 33. If price can break above this resistance at 3560, then we could see some bounce towards 3580 onwards. Yeah. Okay, maybe I just hand back the time to some of my colleagues if there are other questions to answer. Yeah, thanks.
Okay, yeah, thanks. Thanks, Zin. Um, I'll leave some to Darren too. I mean, the CLI. How's the outlook on SIA? Yeah, you can buy now. Yeah, I will just try to answer on behalf of Miamel. Again, she's on MC. We still have a sell call. I think a reduced call. So basically, we just think that recent results wasn't positive, and again, it's just the same story. We just think that there's no pricing power or ability to command higher yield. They call it yield, but actually just prices. That the yield is going to be weak because of the huge capacity that's being brought on to the whole industry. But on the flip side, higher capacity actually will just benefit the services companies like SETS, SIA Engineering, because with higher capacity and volumes, it means that more of these planes need to be maintained and so forth. So it's positive for ST Engineering and so forth. But on the airline itself, it's not positive. I mean, that's how we are playing it. Should we avoid China, Hong Kong equities in 2025 with the impending? For us, we actually, I mean, I don't cover China, but we actually kind of positive in because for two reasons. Firstly, you should expect the headlines to be negative. I think once he comes in, he'll probably impose some tariffs. But the difference, I think we highlighted last week, the difference between this administration and the previous one is that this time round, there's Elon Musk there. I think, and he has vested interest. I think Elon is probably the biggest political donor now to the Trump, and he has of course there's an automobile interest, and there's also plans for satellite interest in China. So and the second thing, the second reason why we're positive is also because there is a way out for China, because under the first administration, if you recall, there was a phase one trade deal where if China buys enough goods, I think Trump actually brought down the tariffs on China. And the third positive is that even if all this doesn't work, the Trump trade should be a China stimulus, because I think China has already blinked, so at least the authorities have blinked. So if China really, if US really impose all these things, I think the Trump trade is that there's going to be a bigger fiscal stimulus. So there's another way to look at the Trump trade, which is a China stimulus. So China will respond, but I think in the near term you might see some sell down before you get that. But the bigger thing to worry about China is not just the tariffs. So under Mark Rubio, the new Secretary of State, he has a proposal which didn't get through. I think that Patriotic Investment Act. That means it's not only tariffs. If you have an investment in China, if you're a US investor, you have investment in China, any income you earn is going to be taxed as much as 40%. So it's not only just new investments, any investment. So this is going to affect portfolio investments, direct investments. Yeah, but for me, I think it'll be, if there's a major sell down in China because of that, I think there could be an opportunity to go in. I mean, this is my own macro view. Yeah. What's your view on ST engineering? We are still positive, but we are marginally we're just worried about the price action. So even though, in theory, with all these conflicts, defense spending is doing well. environment's positive with all this aerospace, that is also doing well, but the share price isn't really reacting much to it. So the price action worries us a bit because even though the macro, the storyline is all positive, but we're not getting enough of the price action. But fundamentally, we still are positive. Our price target is about $5, so no change in that view because the environment is still generally still positive. I'll let the rest answer for yeah.
Yeah, I'll take on the CLI question. Share price keeps dropping. Any reason? Is it because the REITs are not likely to do well, maybe higher than expected interest rate? Yeah, so that's one of the reasons as well. But the overall reason is basically interest rates, because CLI is really affected by interest rates, because interest rates will affect them like when they deploy capital as well as the funds that they can get. With higher interest rates, it is harder to deploy capital and also likely to get lesser investments for their funds as well. Yeah, so CLI is really affected by high interest rates as well as the weaker performance in China as well. So that is another factor. Yeah. So that is why CLI in the near term is weak, but overall we still have a buy call, and is one of our topics as well as $3.38 because of we like them for their stable funds business, recurring fee income, lodging management as well, and their private fund has grown quite significantly over the past few months. It's now at 113 billion. So they started the year about 100 billion. Yeah. Yep. So that's I hand over rest of my colleagues to close, I guess. Yeah, thanks.
Yeah, okay. I think it's already already 1 o'clock. So I apologize. There's still some questions that we couldn't address, but with that, because we normally try to stop by 1 o'clock. I don't think anyone will listen to us after for more than 2 hours, or even 20 minutes also considered a lot. So with that, I'd like to thank everyone for all your time, for all your questions. Merry Christmas to everyone, and have a wonderful year ahead. Happy New Year, and hope to see everyone in our next meeting, which is on the 6th of January 2025. And again, with that, I'd like to thank everyone for all your participation, all your kind participation, and all your questions, and I hope we've been helpful for everyone. So anyway, thank you everybody, and have a wonderful year ahead, and happy holidays. Thanks so much everybody. Take care, and have a pleasant week ahead. Bye bye everyone. Thank you.